C'est bon? Okay. Hi everyone, my name is Namir from FundSquare. I'm the moderator today for the panel A Winning Strategy, Green Bonds to Hasten SDG Achievement. Just to check, Timothée, can you hear me?
I can hear you well. Hello everyone.
Hi, so thanks for coming here from home or physically here. Happy to see some faces after a long period. Thank you, Marco, for organizing everything. Thank you for the Italian Chamber of Commerce every time for being behind us. Thank you all of you to coming here today. So let me introduce very quickly my panelists. On my right, Anna, a senior associate from GSK Stockmann, based in Lucknow with a strong background in corporate capital markets, especially in Germany. On my back, connecting from Paris directly, Timothée, Jaulin, from Amundi, head of SG Business Development. Long experience in Luxembourg as well, Paris, New York, and Amundi doesn't need neither an introduction. So thank you so much for being here. In order to have a good view about SDG and green bonds, and especially a winning strategy, it's always good to start with what the client are thinking, so to have a market feedback. So on this purpose, it could be good if Timothée can start to have an initial market feedback about the demand coming from the clients.
Thank you, Namir, and hello everyone. Thanks for indulging me virtually. I'm sorry about the potential lack of quality. I would love to be with you, but we do have strict travel restrictions, so I was asked to stay in Paris. So I don't know if Amundi doesn't need an introduction here, but just in case. So Amundi is a global asset manager, Europe-based mostly, with operations in Asia and North America as well. And the way we define ourselves is really to be a global, responsible asset manager. And as such, we've tried to be at the forefront of responsible investment strategies in terms of strategy design and in terms of engagement and discussion with our clients across the world. And now if we focus on the topic of green bonds, obviously green bonds are linked to the more broader topic of climate change. And you have to understand the market feedback against a very significant backdrop, which is investor mobilization on the topic of climate change issues. And just to give you one figure, as of today, the amount managed by investors backing CDP, Carbon Disclosure Project, for better climate-related data disclosure represents $106 trillion. So that's the amount of money, if you look at it this way, which pays attention to climate change challenge, either because it's a risk, because it's a challenge for value reasons, but investors that care. And that's, I think, one of the reasons why green bond has been such a success from issuers, market participants, but with a very strong demand from investors. Because within this $106 trillion, what type of assets do they manage? They manage not only, but for a significant part, fixed income instruments, debt. And overall, worldwide, we estimate that there is about 100 trillions of bonds outstanding. And green bonds, if you want, are one way for fixed income investors to try to tackle climate change issues for their fixed income investment. It's a product that meets 3 key criteria for success. It's cost effective. It's a good fit within an asset allocation because at the end of the day, a green bond is a bond. And it's risk and return driven to the extent that the pricing of a bond is ultimately linked to the risk that you take at the issuer level. So for these 3 reasons, and because there is this huge level of mobilization on climate change, you can understand that there is a significant demand for that product.
Okay, thank you, Timothée. Anna, a question for you, always for the market feedback, especially if you can give your opinion if there is also market interest shifting, so also on new product of ESG, like SDG linked bonds, transition bonds, etc. Yeah, no, it's okay.
Can you hear me? Yes, great. So I'm a lawyer in private practice, and I advise generally capital markets issuers, so not necessarily focused on green bonds. And pardon. And what we see recently due to the EU regulations is that the interest of issuers is shifting more and more towards also the green aspect, trying to issue green bonds or trying to see whether this makes sense for the business concept. And this interest is actually a positive, I would say, development. But let's say the green bonds as they are today are not necessarily the ideal product for every issuer. And so it's actually very interesting for me to see that, for example, sustainability-linked bonds, KPI-linked bonds are now also in the market more and more, because I think this is something that, for example, for an issuer is more interesting, because they can use the bond proceeds the way they are used to, which is for general corporate purposes and are measured actually by success, which they're also used to. So I think this is a very good product for the corporate issuer, for example. So I'm very excited about this product. But what is great about the green bonds as we have them currently in the market is that they actually lead the way of how it can be done, and that they give a very good market example to the rest to actually how can you set up these products that are now so high in demand.
Very good, thank you. Keep the microphone, I will jump for discussion on winning strategy. To know, from your opinion, if the new level of stringency, so 100% alignment of EU taxonomy, stronger verification of accreditation system, be digestible to the market participants?
That's that's a difficult question. I think they're digesting it or trying to. Well, actually, the regulator made a good start by already including listed companies in the scope of the taxonomy regulation. So they actually do force people to really get into this topic. And to kind of link to the previous panel, it's very complex. And indeed, there is a risk that it's superficially done, because the complexity is something that the market is, in my opinion, struggling with. So we try to help our clients here in offering trainings and in actually educating about the new package of regulation, but it's a big piece to digest, in my opinion.
Okay, thank you, Anna. Timothée, your opinion, especially to know if you think it will remain a best-in-class product or reserved to the most mature issuers, and you think it will bring any additional scale to the market?
Well, we welcome the forthcoming regulation. We think it can really help Europe to remain ahead of the game when it comes to sustainable finance development. That said, I think we have to take one step back and really ask ourselves what investors are looking for when they invest into a green bonds, and what are the criteria or the conditions that could enhance further investors' appetite for this product. When they invest into a green bonds, they get transparency on the use of proceeds that can give them comfort on the fact that A, it's going to be used to finance green projects, and B, it will contribute to at the issuer level to align its overall activities with the Paris Agreement in the long run. So it's a way to put your fixed income investment at work to contribute to the Paris Agreement goals. That said, if you look at the market today, it's very much concentrated in some specific sectors. And I'm talking about, first of all, in terms of type of issuers, mostly public institutions and very large blue chip companies, because it's a market that has been created and supported in the first place by large multilateral development banks, notably the EIB in Luxembourg. And it's mostly from issuers which are located in Europe. The result of that is that if you invest into green bonds representative of the market, you end up with an overweight in AAA rated issuance coming from European issuers, which deliver very low return. So I would say that one first challenge that we've tried to address partly at Amundi is the challenge of combining green bonds with return. And to do so, you have to extend green bond markets to other areas. So it can be to move from Europe to emerging market. That's one challenge. Second challenge is to move from very large blue chip companies which are regulated, listed, and used to provide the reporting that they provide in their green bond framework to other type of issuances. It can be mid-cap companies, it can be securitization. So we have designed a partnership with the World Bank to extend green bond market in emerging markets. It's worked well. We've launched the largest green bond fund, which, by the way, is a Luxembourg vehicle. We have done another partnership with the EIB to extend the green debt market to other segments to seek for return. And by doing so, we have also built a stronger narrative in terms of additionality, meaning that by issuing a green bonds, issuer actually really change the way they do business to become more sustainable, more climate friendly, and more Paris aligned. So now, if you look at the current regulation, at least in a draft form, I think one needs to ask this question is, of course, we need labels. We need to make sure that these markets are of very high quality, that the projects that are financed are green and in line with European green taxonomy. But you also want to make sure that the market will keep growing in the sectors where it's needed to meet investor demand, but also to help supporting the Paris Agreement. And obviously, we need to convince more and more issuers beyond multilateral development banks to be greener. And we also need to convince emerging market issuers. So we need to have an approach that also supports market growth beyond having very stringent requirements within the EU.
Okay, thank you, Timothée. Last point, COVID-19. Okay, we're happy to go out from the lockdown, but the question is, are those products providing good returns, especially after this testing period? So especially if we start from the hypothesis that the strong ESG credential will journey more resilience to the market downturns. Two questions for each of you. We can start from you if it's okay. What is your take on that, and how do you see the current crisis, especially reshaping the fundamentals or sustainable finance?
So I was actually very happy to hear that green bonds did perform so well in the crisis. I did not know that before we talked about it. How do I think it reshapes the economy? Actually, we have a very big disruptive event that happened with COVID-19. And I think where there's disruption, there's usually maybe sometimes a restart, there's new funding coming in, and it's very important that the funding that comes, especially from government sides at the moment, is bringing the funding in line with the SDGs, is maybe requiring the SDG achievement. So it's supporting the strategy they had before. I feel there's a risk, but there's also a hope that COVID-19 might either divert from the struggle of climate change, which is a bigger but maybe not so immediate emergency, and but there's also the hope that it might prepare us better, because we're actually dealing with a crisis right now, and might learn from that positively.
Thank you, Anna. Timothée, in 2 minutes, your point of view?
In 2 minutes. Well, first of all, I think I like to state the obvious. Climate change was there before COVID-19, and it will continue to be there after COVID-19. So from a structural standpoint, investors' appetite for sustainable product, also linked to climate change, will remain high, and we don't think COVID-19 has changed anything and will change anything. If anything, the appetite from investors for sustainable investment has not decreased, it has increased, and we have seen a better resilience in ESG strategies, notably green bonds, throughout the crisis versus non-ESG or regular bond strategies. So I think it's something which is very important to state. Second, and that was, I think, an open question in the midst of the crisis, is whether or not it will have an impact on societies and consumers' appetite for a more sustainable economy. And the answer is no. If anything, it has increased this appetite, and this is especially true in Europe. And we were very glad to see and to support the Green Recovery Plan that was put together by the European Commission. And from that standpoint, you can obviously make the link to companies, and companies which are greener will be the ones which are better positioned to take opportunity of these green recovery packages, which are taking place in Europe, but not only in Europe. So we see, to resume, climate change being still one of the greatest challenges that we have to face together. We see increased appetite for sustainable product, and we see obviously an increased need to take into account climate change challenges when assessing companies' resilience and capacity to generate cash flow in the long term.
Thank you, Timothée. Last point, just the takeaways, so everyone can go out with what I have learned today. Anna, in 30 seconds, 28 seconds, your takeaways in bullet point.
In 30 seconds. I think my main takeaway is that the market needs to, for me, to continue to be innovative. There's regulation in place, we need to deal with it, but we also need to actually find solutions for the problem. We need to not lose the problem out of sight, which is climate change, not COVID-19. And I hope we will achieve that.
Lawyers are always there to help for the regulation. Thank you. Timothée, your 1, 2, 3 takeaways in 28 seconds.
I think on the question on standards and regulations, obviously we need very good standards, but and ambitious standards, but we need to make sure that they do not prevent innovation and growth outside Europe, because climate change will not be solved only by European actions. We need to mobilize everyone. So that's one very important key takeaway. And the second one is that in the context of potential second wave of COVID-19, obviously, resilience is the key word. And there is more and more appetite all across the world for building more resilient societies. And green bonds will play a key role in building these more resilient societies.
Fantastic. Timothée, thank you very much for taking your time from Paris. Anna, thank you so much for being part of us today here. Thank you for the public here and at home or your office. For any kind of question, please contact us via LinkedIn. Thank you very much. Bye-bye.
Thanks. Have a good day.
Break. So don't wait somebody to